Hey, what's up, everybody? Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist Podcast, where we feature questions from you, the YFP community, to be answered by one of our very own fee-only certified financial planners. Please note this podcast is intended for educational purposes and should not be considered financial or investment advice, as we do not know all the variables to one's personal situation when answering a question. Before we jump into today's question, a shout out to our extraordinary YFP financial planning team that makes this segment possible. Your Financial Pharmacist offers fee-only comprehensive financial planning services that are customized to the pharmacy professional. So whether you want to pay off your student loans, make the right investment decisions, or simply build a solid financial plan, we'll help get your income working for you rather than the other way around. You can learn more by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Keith in Cleveland, Ohio.
Hey, Tim and Tim. It's Keith from Cleveland. I was just wondering your guys' thoughts on cryptocurrency as a form of investment, and if there are any good ones, which particular ones, or how do you determine it, or the future of it. I've tried to do some research on my own, but it's all just so new that I'm just a little confused by it because it's not real per se. It's not backed by anything, but I'm just wondering your guys' thoughts. Thanks so much.
Thank you, Keith, for submitting your question to be featured on this week's Ask a YFP CFP segment of the Your Financial Pharmacist Podcast. Tim Baker, cryptocurrency. What are your thoughts?
It's a tough one. Crypto is, I think the knee-jerk reaction to most people in financial circles is stay the heck away. So Keith, I'm going to take this less of like advising like what cryptocurrency and things like that, because I can't do that anyway, in this forum, and more about kind of just educating the listeners a bit, and then potentially seeing where this fits in your portfolio. So cryptocurrency is a digital currency basically used to buy goods and services. And, this digital currency is digital. It only exists electronically. It uses an online ledger with a strong cryptography to secure the online transaction. So unlike the US dollar or the Canadian dollar or any other, the pound, it's not attached to a government or a central bank, which makes it appealing to some, but maybe not to others. So what cryptocurrency basically does, they have tokens, and the most common is Bitcoin. That's what you hear. That's what makes all the headlines. And the technology that really supports cryptocurrency is called blockchain. And blockchain is kind of decentralized technology across multiple computers across the world that basically manages and record these transactions. And I'll tell you, Tim, I will say I am not an expert on crypto at all. I've watched documentaries, I've watched videos, I have a few books in my cart that I'm going to read. And to me, it's more interesting than anything else. But the blockchain, you think of this as kind of a worldwide peer-to-peer network where there's this huge global entry called blockchain, and there's a lot of different people keeping track of really the same thing. So when you make transactions, Tim, if you pay your brother in blockchain, then, I might record that, and John across the world might record that. And then we kind of compare our notes. So a lot of people keeping track of the same thing. They're trying to the idea is to kind of keep the transactions in sync and really announce transactions. And that's why you kind of get into things like mining and how this whole process work, and how do you have public and private keys and all this stuff, which again makes it very, very confusing. So to me, when I think of cryptocurrency, is I don't know. That's my honest answer. Like I said, Bitcoin is the most popular, has the largest market cap. I think I read somewhere that there's like 7,000 different cryptocurrencies out there. So there's obviously probably going to be there's an expanse and probably a contraction in that. Earlier this year, the market cap for all cryptocurrencies was like $1.6 trillion. Is that a fad? I don't know. People like crypto because they see it as really the currency of the future. They like the fact that central banks are removed. We know because of many of the recent recessions and just how banks can behave, that central banks are not necessarily out there for the best interest of their constituents. So the fact that there's not a government managing the money supply, they like that. And a lot of people like the fact that it's speculative. So if I buy, a Bitcoin today, what is that going to be worth, this time next year? And we've seen Bitcoin just explode in value here recently.
Can we take that 1.6 trillion of Bitcoin and move it to the
Apply it to
1.6 trillion of student loans?
Yeah, that would be nice. That's the first thing that popped in my head when I was looking at that. I think the reason that people don't like Bitcoin is they don't understand them. It is difficult to kind of wrap your brain around. Some people look at them as that they're not safe. I know Warren Buffett, he said, this is a quote, he said, he compared Bitcoin to paper checks. It's a very effective way of transmitting money, and you can do it anonymously and all that. A check is a way of transmitting money too. Are checks worth a whole lot of money just because they can transmit money? So obviously this is someone who's very educated and in the know of the markets. And he's, again, not necessarily a fan. I think even, I believe Bill Gates was kind of against Bitcoin. One of the things that currencies typically need for them to catch on is stability. And that's not Bitcoin. That's not cryptocurrency. They're very volatile. And there is risk for like hackers. So I think there was a case in 2014 that hackers stole hundreds of millions of dollars in Bitcoins on a high profile exchange. So there are risks there that you don't typically see in typical, traditional invest in like the US stock market. I know Paul isn't a big fan of them because from a tax situation, Paul Eichenberg is our IRS enrolled agent. We call that question out, like, have you invested in any Bitcoin? Because I think it makes the tax lift a little bit heavier. So in terms of how it fits into your investment portfolio, we typically take the approach of like buy the market, don't try to beat the market. So, the passive index funds, keep it simple, keep costs low. Really the next step from that is kind of the individual, hey, I want to buy Facebook, I want to buy Tesla. That's a little bit more speculative because you're putting all of your eggs in one proverbial basket. I think this is another step in that direction in terms of volatility and risk. So sometimes with great reward, there's great risk and vice versa. So, a lot of people that I see that are asking me about Bitcoin probably shouldn't. So, because there's typically a lot of other things to worry about, whether it's debt, consumer debt, having a plan for the student loans, making sure the traditional, investments are there. And a lot of people are like, well, like maybe I'm thinking outside of the box. I want to kind of get ahead. There's just a lot of times in history where that kind of fell flat on its face, So I'm not here to say Bitcoin or cryptocurrency will never be a thing, but there's typically say first things first, right? So I think when all the T's are crossed and the I's are dotted, I don't think that there's anything wrong with putting money into a speculative investment, but that's typically there, when you understand what you're invested in. And that's hard for a lot of people in crypto. A lot of investments that are typically more advanced, they want you to be an accredited investor. So this is a person that makes a certain amount of money, has a certain amount of net worth. That's not necessarily true for Bitcoin, but these are investments that are typically harder to understand than, say, buying, a private placement or, a syndicate, real estate dealers, things like that. So, I am not saying buy crypto or not buy crypto. What I'm saying is, it's not outside of the realm of possibility. Just understand what you're doing as best you can. And again, what a lot of people do is they get excited about something and they put all their eggs in that basket, and that can be catastrophic. If you're going to dip your toe into these waters, I would say, do it smartly as best you can. And again, I'm always going to be a proponent of having that safeguard, which might be a financial planner that says, hey, am I completely crazy here? And have someone to, basically shoot you straight in terms of what you're thinking.
Yeah, and I'm glad you said, Tim. I think we're certainly not in the business of saying no one should ever do whatever, right? I mean, we've hammered over and over again on the show that obviously so much of this is individualized. Two things that you said that really stand out to me are timing. So where does this, not timing the market, but where does this fit in with other things you're trying to prioritize or perhaps should prioritize? And then also making sure you feel good about understanding what you're investing in. I think that's just a good general rule of thumb, whether it's real estate or crypto or whatever. Like, do you feel comfortable and understand what you're investing in? If yes, and if you've evaluated other options, if the timing makes sense, perhaps not, but making sure you at least feel confident in understanding what you're investing in, whatever that investment would be. Keith, thank you again for taking time to submit your question to be featured on this week's Ask a YFP CFP segment. As a small thank you, we're going to be sending you a super comfy YFP t-shirt. And to those listening, if you'd like to have your question featured on an upcoming episode, please go to yourfinancialpharmacist.com/ask YFP or shoot us an email at info@yourfinancialpharmacist.com. Have a great rest of your week.